But let's move on and talk about today's debutant on D Street. We have Knowledge Realty Trust that made its debut, and it's listed at a premium of 3 to 4% versus its issue price. Now we have the management of the company joining in with us, Shirish Godbole, CEO of Knowledge Realty Trust, as well as Bijay Agarwal, Managing Director of Sattva Group, joining us to discuss the outlook and the way forward for the company. Gentlemen, good morning and congratulations on your listing now. And now since you're listed, let's start by talking about your expansion plans. We've spoken about where the funds are going to be used, repayment of debt, especially this is coming in for your assets, that is for the SPV side. Now, talking about the way forward, what about the expansion plan? 29 assets you'll have across 6 cities. Which is going to be the biggest market? Where are you going to be focusing on? Bijay, if you could start with that.
Yeah, thank you for calling us on this thing. We've been able to acquire the next 18 months at least 3 to 4 assets. This is our acquisition plan. And why we are so bullish on acquisition? Because this is a brand neutral platform. So anyone, any developers, any HNIs can join, and we can offer them to sit, and then they can able to be put their logo, they can continue with their brand. So that will be anyone's desire will be that they can see that their brands and all. And Knowledge Realty Trust provides that platform to anyone who can join us, and brand neutral. That is the best benefit of this REIT. And we are very bullish on the new acquisitions.
Okay, all right. Hi, gentlemen. You all are quite excited. I think if I got that correctly, you said in the next 18 months you'll acquire 3 to 4 assets. Is that correct?
Yes. Yes.
All right. Break it up for us geographically. What would your geographic preference be when you're looking to expand?
Sure.
Yes, sir. Please go ahead.
Just say that, Mr. Agarwal is very, very positive and optimistic. We're going to work hard. Hopefully, we will make those 3 or 4 acquisitions in the next 18 months. We're going to make sure that they're accretive also. So we're not just, acquiring for the sake of acquiring, but this will help our DPU and this will help the company. And as far as geographically, I think, we are in the top 6 cities in Mumbai already, in India already. And we're going to make sure that we continue our focus on the larger cities. Obviously, there's Pune, Calcutta, some other cities out there which we could expand into. So we're going to keep our eyes open for acquisitions. But that's the focus for now. And so that's where we are.
Okay, so that's going to be in the larger cities. This expansion that comes in as of now is going to be in the top cities where you all are currently present, right? Shirish?
So currently present, we're also not present in Pune and Calcutta. So
that's where you'll add
potential cities we expand into. It really depends on the opportunity, right? I think it's if it's accretive and if it helps our DPU, we'll make the acquisitions in the larger cities because that's the demand in office. The office demand is in the bigger cities. Tier 2s will happen, but till today, still the larger cities have the opportunities.
Okay. And now, there are concerns coming in from that IT side as well, right? Some bit of those layoffs. What's your exposure to that? And, could that, slow down a bit in terms of expansion or the cities that maybe you are looking at right now?
Yeah, go on, sir.
In our portfolio, the IT has been very minimum, less than 10%. And we believe that India is a dollar rent. And dollar rent will not go anywhere wrong. Because we are 82% less than the US market in the rent-wise. So where will go wrong? And this, we have not only the IT, the 10%, we have in financial, GCC, GCC and other sectors also. So IT has been very minimum. So we don't see any risk in this portfolio.
All right.
And while IT, has had a bit of a slowdown, if you look at the Global Capability Center story, the GCC story, that's a trend that's developing and we think will continue to develop. And what drives GCCs is really the fact that technology has become so important, not just in technology companies, but in every company, right? And so therefore, GCCs are very important for all corporations, not just North America, but also Europe and Asia. So we're very comfortable and confident that despite maybe a slight slowdown from the IT world, our office demand will continue.
All right. The NOI is expected to move, I think, from around 3,400 crores to around 5,500 crores by 2029. Could you tell us what is the yield expected? And if you could tell us what will the area under management look like by 2029? Yield and area under management. Please go ahead.
Yeah. So, we have a stabilized yield of 7.2%.
Okay.
And that we, project to expand and grow from 7.2 to 7.7 and then up to 8.2 and so on, with the growth in NOI, as you pointed out. And in terms of square feet, we have out of the 46 million square feet, 37 million square feet today is built and constructed. There is 1.2 million square feet that is under construction. So the current NOI projection that we have is simply including the 37 plus the 1, so 38 million square feet of total, space from our side. This does not include acquisitions, as Mr. Agarwal pointed out. Hopefully, we make these acquisitions in the next 18 months, and that will only further increase our NOI.
How much would that increase it by if you make those acquisitions in the next 18 months then?
Well, it depends on the accretive nature of it, right?
And rent
because,
also.
Today, what's happening is rents are going up, as Mr. Agarwal is saying, and if the rents continue their climb and we are able to make accretive acquisitions, it's really hard to put a number. Obviously, it depends on the specific acquisitions and the numbers at stake. But clearly, that's going to be additive, further adding to what numbers we are projecting here. That's sort of...
Yeah. How often are these rent prices revised, if you could give me that as well. So, I would understand about the rentals, how do they move out?
So, all sort of leases typically have an escalation clause. In Mumbai, we typically have shorter 5-year leases, and there are annual escalations of 5% each year. In Bangalore, Hyderabad, some of the southern markets, the lease terms are typically longer, and we have escalations every 3 years. Now, it's 15% approximately. Some are slightly less, but approximately 15 every 3 years. Okay. So it presents an opportunity for the rents to go up. And also, I might remind you that, our portfolio, the rents we have are way below market. So not only are we getting escalations, but we're also getting a mark-to-market. So we have rents which are 20% plus below what market rents are. So as these leases mature, our rents will grow in addition to the escalations that you were discussing.
Normally, we're seeing it that whenever any tenant goes and the new tenant comes, at least 15 to 20%, as Mr. Shirish said, that 20% we get the extra rent. So that is the additional benefit apart from the normal increment of 5% in a year and 3 years in 15%. This is the benchmark of the industry, real estate industry, of the leasing industry.
All right, gentlemen, congratulations on the listing. Thanks for detailing your plans for the next few years. We wish you all well, and we look forward to interacting with you all as this journey progresses for you all. Thanks a lot for joining in.